Hi, my name is Jamin Goecker. I'm a realtor in South Central Alaska, and my mission is to help people build intentional, significant legacies for themselves and their families by coaching them in real estate. Obviously, a big part of that is going to be making sure I'm keeping you very well informed on what is going on in the market. In this week, as usual, we're going to be comparing the past month in Anchorage to the previous year's 1 month time period from about mid-August up to about mid-September of the same time last year. So we'll be comparing a lot of the big market numbers, and we're also going to be looking at an interesting metric that I was studying earlier. What it is looking at the most favored loan type that was used during this time period compared to the same time period last year. And it's pretty drastic, and I have some interpretations on it. I'm not 100% sure what it means, so I'm open to alternative interpretations, but we'll dive into that. But before we get started, you know what to do. Give this video a like, make sure that you subscribe, and if you do have any questions, post those down in the comment section. Now, without further ado, let's jump into it. So by now, you know how this works. We're going to start off by just looking at the total number of listings that we have available on the market, and this is going to be the inventory. As you see, we are seeing still a significant dip in inventory overall for Anchorage as a whole. There was just over 1,300 homes available on the market last year. Now it's 1,041. So that's a pretty significant chunk out of the market all of a sudden like that. So that's really is low inventory. It's nothing new really within the past couple of months, but that continues to be a factor. Now, the number of properties that are going under contract during this time period from about September 24th to August 24th to September 24th at the time of the recording of this video is also significantly higher than what it was for the same time period. Looking for just that month period, we're seeing last year about 248, now 404 properties went under contract. So that is a very healthy market, clicking along very quickly, and still demonstrates a very high demand for properties. Now, this to me is going to be one of the most useful metrics to kind of see just how much real estate is in demand at the moment. So this is going to be the pending ratio. So remember before we said just over 1,041 properties were on the market. Of those 1,041, according to this, during that same time period, about 57% of those properties actually aren't available anymore because they're already under contract. For the same time period last year, though, only 36% of those properties were actually pending. So what this means is we have less properties, and of those properties, actually fewer of them are actually available to be purchased. Now, this is going to be a metric I've mentioned before in previous videos for the last couple of months. It's something I continue to keep a really close eye on, and that is the number of new listings that are coming on the market. Now, the reason we watch this very closely is because it's a very strong seller's market at the moment, and I've had suspicions for a while that we are going to start seeing a shift to where it will become much more of a balanced market. I wouldn't say buyer's market, but much more of a balanced market. We're seeing a little bit of that here. If there's going to be a change going at this rate, it's going to be very slow and gradual, because that's obviously last year about 364 homes, new listings went on the market. And now, about 391 went on the market during that time period we're looking at in Anchorage. So a little bit of a change, but not too much. Something we're still going to keep an eye on, but something that that we don't really need to be concerned about right at the moment. Look at the number of listings sold during this time. In other words, it's all recorded. And you got the moving truck out front. It's officially somebody else's. That obviously took an increase, going from 272 last year to 332 this year. So that's that's pretty good. It kind of just is going to support what the information's been telling us. The number of volume has also been significantly higher than it was last year, even though we have low inventory. And let's have a look at the price of the average homes sold in the market during this time period. So here, keep in mind, these aren't always the best indicators to see how the market's doing. But and the reason I say that is, the average right now this year is about 389, actually roughly 390,000. What happens if you get a property that's, let's say, 2 million or $1 million, and you throw that in there? That's going to throw all the averages off. But we do include this, though, just because it does kind of support what we're seeing in the rest of the data, that, in fact, it is a strong seller's market, because these prices are going to go up when it's a strong seller's market, just because there are less options for buyers, and they're going to be have to compete for the properties that are available. So that's again kind of a healthy indicator of a seller's market. Now, days on market. This is also an important metric for us, more so than the average days on market, in my opinion, because this is going to be the overall average for all the different price ranges, from the property that's listed for $299 that sells within a day, and the other one that's a huge mansion up on the hillside that takes 287 days to sell. This is going to be the overall average of all of those days. So any kind of change in the average days on market is going to take a pretty a pretty significant Herculean effort to make any kind of a difference. And this is actually a fairly significant difference, going from 44 days to 38 days during that 1 month snippet that we're looking at. So yeah, like I said, just more evidence showing that this is a strong seller's market. We do expect the days on market to decrease as we have a seller's market, just because buyers know that if there's a good property out there and they want it, they can't sit around very long because everyone else has seen it as well. Has this been useful for you so far? If it has, make sure that you write the name of the specific area that you would like to maybe have covered in more detail in future videos down in the comments section. And if you're trying to really get a feel on what's going on in the market, definitely check out some of my videos from the past on Anchorage or any of the other market centers you're going to find in South Central Alaska. Now, without further ado, let's go have a look at that little extra metric we discussed before with the loan types used during the month time period that we're looking at. Lastly, the thing that I really do want to check out and kind of show you is going to be what is going on with the loan types of properties that are going under contract. So what we're seeing right now, and the last metric that I really want to dive into and analyze is going to be the loan types of the properties that are going under contract. Now, this is important because the loan type is going to tell us a lot about who's actually buying these homes right now. So just looking at these right here, this is going to be the types of loans that we have in the market during the time frame that we're talking about last year. Now, the thing that really stands out to me first off is conventional is going to be the lion's share of everything, followed by the VA loan. So that's obviously going to be fairly close, but compared to the rest of them. But the rest of it is just going to be a smattering of different loan types, all the way from AHFC conventional, first-time home buyer, and so on and so forth. Now, this year, looking over here at this column, I find this one very, very fascinating. And I actually did speak with a lender that I work with First Rate Financial, Barclay Roeder, and we were really trying to figure out this number right here, because the number of conventional loans last year, or the number of properties under contract using conventional loans was 222. This year, it's 316. And that difference actually accounts for the majority of the increase of the total sales during this time period. As we see, this obviously goes up by roughly 100, and then this goes up by roughly 100 as well. So that's going to be the lion's share of where we're seeing the movement there. Also significant is that VA made next to no change. One sale less overall for that period. So what we're seeing after Barkley and I kind of talked it over is that the theory we have, so after checking this out, the theory that Barkley and I have is that the people who are going and getting conventional loans are going to be the people who probably already have a house and they're simply wanting to upgrade and take advantage of the lower interest rates. Because right now, if they're at something that's below 400,000, suddenly the interest rates go down and they can afford something over that $400,000 threshold, and they decide, hey, this is the time. It's time to upgrade. It's time to go get a bigger property and essentially pay the same because the interest rates are going to be lower. So we're seeing, that's the theory that we have, that we're seeing more movement in conventional loans just for that reason. Another thing I thought was interesting, AHFC first-time home buyers this year was 2, and the number last year was 10. So we're actually seeing a kind of a dip in the number of the first-time home buyers. Obviously, that's not a huge sample size either way, but that is something that we kind of want to take a look at and see if there's any significance to that specific metric. So that's really what we're seeing as far as the loan types for the properties that went under contract during this time period. Okay, now let's put all of this together now in a summary that's actually going to make sense. So the big thing is inventory remains low. We are starting to see a little bit of a creep up in inventory compared to the inventory we had in the previous year. I don't see that making a huge shift anytime soon and just completely throwing off the low inventory we have on the market, but it is something that we want to keep an eye on. Also, we're seeing that the average sales price continues to be pretty steady, if not a little bit above of where it was before. So if you're looking to potentially sell a property, you probably are not going to find a much better time than this window that we're currently find ourselves in. And lastly, just looking at the loan types that were used during this time period, we don't know for certain, but what we can kind of guess and interpret from the data is that the people that are buying properties right now are probably people that already had a house and now they're trying to upgrade to get another one. So that's really what we're seeing so far from the market. Obviously, I am more than open to hear your interpretation. If you do have any other ideas and why that specifically that loan type is the way it is, make sure that you post those down below and be happy to discuss those. If you do have any additional questions, you know where to post those. If you have any additional questions, you want to reach out to me personally and make sure that I'm going to be able to respond, because I do my best to respond to as many comments on the comment sections as I can. I can't get to all of them though, but definitely keep them coming. I'm going to do my best to get to as many as I can. If you have to have a response from me though, make sure you reach out to me directly through my Facebook page. The link for that is going to be down in the comment section down below. If you're wanting to start looking for properties in the Anchorage area, by all means, stick around, listen to my video right after this that's going to be walking you through how to download the app and begin that search. So thanks for watching. Hope this was useful and look forward to seeing you next week. Downloading my app is pretty simple. You simply scroll to the description section of my videos, click on the link there. It's going to take you to my website. From there, scroll down, hit download app. It'll take you to a place where you enter in your phone number. Enter that in, click send link. It's going to text you a link to the App Store. And from there, you'll have to click on that, enter in your email address, and then it's going to register you to the app, and you'll be able to start modifying your search. You can modify number of bedrooms, bathrooms, property type. You have a lot of modifications you can do on there, or just draw a shape to it. From there, you'll have the ability to go and just browse through, create your own specific saved searches on there that's going to make sense for you. Go ahead and add notes just so it makes sense. And that's going to be kind of the basic search capabilities. There are a lot of extra bonuses and things to this that make it really beneficial, like walking you through the entire process as a buyer or seller and giving you all the details that's involved with each one of those steps. So never at any point are you going to be lost in the process. So we've kind of just scratched the surface here, but that's just to get you started.